So guys, I'm getting a lot of questions from a lot of new people starting up ecom businesses. And one of the big questions is when they need to register for sales tax. So you're selling in America, whether you're a foreign non-resident, you registered an LLC in Wyoming, or you're a resident and you registered an LLC in your home state. Heck, you're a sole prop, sole proprietor. You're just trading in your own name. You would have heard of this word called a nexus, right? So I want you to think about a nexus as a base where you need to register for filing sales taxes, right? So practically, let's talk about this in three levels. Home state, i.e. where you live and you have your LLC, or if you're a non-resident and you've registered in a specific state, that's state where you've registered your LLC. Register for sales tax straight away in that state. Big benefits, you get a seller certificate, right? So your suppliers then won't charge you sales tax. And if they do, you send them the certificate and then you don't bleed out on sales tax being charged to you. Big win, right? You still need to register. And if you have any customers that you are selling to in that home state, right, you need to charge them sales tax. Okay, so that's step number one. Then you got to think physical presence nexus. Now, this is not just where you run your office from, but let's say you are, you've got your home state is California. You've got a small little, office out back with 2 staff. Great. All customers in California, you are charging sales tax to. But what happens if you've now got using a 3PL, an outsourced warehouse, set up to make sure your deliveries around the country go quickly, right? So you got New York, you're in Florida, and you're in Ohio is not a good example, no sales tax, but you're in Texas, right? Now those 3 states, if you're keeping inventory in those 3 states in a third-party provided warehouse, you still got physical presence, my friend. So guess what? You need to now charge sales tax to customers in those 3 states where you have physical presence. Right, so those are quite black and white, simple. You need to register and you need to file, but you also need to charge sales tax. Make sure you're not charging sales tax before you actually register. That can get you in trouble. Next up, you have this economic nexus. Now that's different for every state, every county, right? So what you need to be doing is you need to keep a close eye on where your sales are growing. So I'm not going to run through each state's kind of quantity or value threshold, but my experience, as soon as you start getting to 150, 200 sales in a year to a specific state, flip man, you better start thinking about sales tax in that state. And if you have multiple states, you might want to plug in multiple sales channels. You might want to plug in something like Taxify or TaxJar to help you manage these economic nexus. But if you're just starting out, don't stress. Do your home state, right? That's all you need to worry about. Slightly different if you're just selling on a marketplace like Amazon. Amazon in just about all states now collects for you and pays across on your behalf. But if you're multi-channel and you're selling in Amazon, you might be in 5, 10 different FBA warehouses around the country. If you've got multi-channel and you've got a Shopify store or WooCommerce store also selling, well, remember, you're hitting economic and physical presence thresholds based on your Amazon and your Shopify sales, right? Not just your Shopify sales by themselves. So keep an eye out. That's the basics. But most of the people who speak to me about sales tax are starting out. Don't get ahead of yourself. Home state, register so you can, not be charged sales tax from your suppliers, and keep an eye on warehouses and keep an eye on the volume and value you're doing. Think about 150, 200 orders in a year. Okay, for a state. Cool, guys. Hope that helps.